Hey, welcome to Trigger Point Research Setups. And what I thought we'd do today is talk about a stock that's been plowing lower and look at some of the indications that we had, because what we're really trying to do is find those spots that we can identify using a variety of different metrics, particularly volume at time and price at time, to find out where there's a lack of participation and where in fact there may be an opportunity to pick up a stock on the long side or on the short side. Now again, these are just setups, but these are things that we're looking at. Sometimes they do in fact pan out, and when they do, they become an alert. And when we alert our subscribers over at Trigger Point Research Alerts, they'll get an email or a text telling them exactly what's going on and how the entry is, what the price targets are, etc. Now I wanted to go back to what we talked about last week, and we talked about Ann Taylor. Now if you remember last week when we looked at this, we had basically been looking at the level that, hey, you know what, there's an interesting bounce potential here at about the 34.5 range. And there was, what we were seeing at the time was very little upside resistance all the way to about 36.5. Now you saw that because we saw that there was very little volume participation, and when we look at this particular chart using the radar, what we're finding is that there's little activity here from about 34 and change up to 36, and also there's a top side of about 35.60 or so, which is exactly where it resides today, the stock price. Now, what did happen and what did play out is it did in fact bounce higher. The stock did move up very nicely from about 34, and if you look at this a little bit differently, if we throw on our automated process, the autopilot, you can see this in living color, where there was in fact an entry over at about the 34.50 range, right here, this yellow bar, and you would have been in there long, and you would have still been riding this up, and you can see how in fact this did power up very nicely right when we got into this area where there was very little volume. So this was a questionable entry because there was a very limited range, but I thought I'd show you something today that was a little bit different. And this is, we're in the middle of earnings season, and one of the things that we look at is, well, how are stocks doing after their earnings? So here's Hertz, and this is a daily. I want you to look at this. This is very interesting, and I'll zoom out a little bit here so we can see a little bit more of the dimensions of this. And what we're looking at really here is a stock that came in and disappointed investors. And what we can see here is, I'm also going to throw something else on here, the altimeter, just to take a look at this. In fact, I'm going to take off the radar. There we go. Now, what we can find here is, it's very interesting that there was a gap down that happened way back in September, at about the end of September. All right, we saw this gap here that ended up moving this stock lower, and then a consolidation that moved up and down inside of this range on the daily. And it moved back up, and then all of a sudden it started breaking down. But notice something very different here. What you notice is that once it did break down where there was very little volume resistance or support, it really crashed down. Now, what does this equate to? We can move this across and see. Let's look to our left and say, oh, you know what? There was some volume over here where we're seeing the bottom of the altimeter at about 20.5 right there. But really, if you want to look at this, you got to say that, there really isn't a lot of support until we get down to about 18.5. The range between 18, we'll call it to about 18.5, is really the support range here because there's not much going on. When we add that other dimension, which gives us a little bit greater level of viewing here, and that is the radar that shows us where the actual volume resides. Now what we can see here is that when we're looking at where the lack of volume is, it's right below the $20 range. Now if this stock does in fact break down the $20 range, you're going to see a big problem here. But what's interesting to see is the consolidation that then leads itself into a fast zone, where you see that there is an opportunity to actually from about we'll call it 2170 down to about 20, so about 5 or 6% that you could have possibly looked at as an area that would have been beneficial to enter a short position in. Now, this market that we have right now that has very little appetite for anything other than moving things up against all odds that you can look at. And when you just think things are going to break down, it does in fact turn around and move higher. Just consider that, because there is a lot of people that are looking to buy the falling knife, which is usually a big no-no when it comes to investing. But I thought that it was interesting to look at that. Just again, you can see very vividly that there was this level of interest at about 2170, and once it broke that, it really broke down. And if we kind of move this across here, and you can see that was the high volume node all the way across at about March of 2013, and that's where it was supported. Again, I think there was a lot of activity that had to really be placed in there to support this, and beyond that, you really could have seen a breakdown into the 18s. We'll have to see how this plays out the next few days, but you can keep a look at this and see what happens and how this does play moving forward. And of course, get your free subscription to Trigger Point Research Alerts. You get a 14-day, and I think you'll enjoy it. Thanks for joining me.